Everyone, including traders, loves to win. We get that dopamine hit, right? Every time we have those winning trades, it's just inevitable. We can't help it. It feels good to win. And one of the primary reasons why people get into trading is to earn money. We want to get rich. We want to make money. And the prospect of turning huge profits motivates a lot of people to trade. However, on the flip side, it brings about the loss aversion bias. So encountering a loss is far more painful than the pleasure derived from a winning move. That is why many people are reluctant to implement risky strategies because of the potential to make a significant loss. Therefore, traders will often focus their energies towards avoiding the loss altogether. This way, much focus is trained on the potential loss as opposed to the gains. A lot of people will ultimately opt for a smaller reward than risk the move in search of a more significant profit. How many times have we heard traders removing their stop losses? This is a typical example of loss aversion, removing the stop loss in order not to lose the trade. And so they'll just keep moving that stop loss further and further and further away. And the loss just gets out of control. This is a typical example. And often the best response to losing a trade is just to cut the loss. Just cut it. Often people's basic risk management trading plans just go out the window during these moments of impulse, just to avoid that loss. So a loss aversion bias might prevent you from doing this because the loss is a shock and it can be exacerbated by leverage. This cognitive bias is rooted in the hope of a turnaround. It can be a long wait, especially if you think the upside potential remains strong. It's typical of these traders who remove their stop loss or who just widen that stop loss. And then they think, right, if only price can just go back to my entry, I'll just get out. That's what they're thinking, just to avoid the loss. This is that loss aversion bias. If from an individual perspective, this happens. But if you look at the charts, if you look at price action, you can actually see this occurring. You can see when price has broken structure, and sometimes you get a retest. And this retest is traders, or should I say institutional traders, getting out of positions that they are in the wrong direction of. And this happens a lot. Not all institutional traders profit all the time. Every single trader will have inevitable losses. But you can see when market breaks out of a level, you get that retest. That retest is essentially them getting out where they decided to go against the breakout. So I think they call it the mercy trade, or it's like the market just gives you mercy. That's your opportunity to get out. But over the long haul, it just doesn't work. It just doesn't work when you hope, right? You have this hope that price returns back to the entry.